Hi, everyone. Welcome in and thank you for joining me today. Hope you guys are doing well. Today, we're going to take a look at Apple stock. So, Apple reported its quarter one 2025 earnings yesterday. So, in this video, we're going to do three different things. Number one, we're going to take a look at some news articles that talk about the earnings report. Number two, we're going to take a look at the chart for Apple stock. And number three, we're going to take a look at price targets for the stock, what analysts think the stock will be worth in 12 months. And then I will also be sharing my opinion about Apple stock. So, some good stuff to talk about today. Before we do get started, I would like to mention that on my YouTube channel, I create content about money, sports, and personal topics with the goal of bringing value to other people's lives. So if you guys do find value in my videos, consider subscribing to my YouTube channel so that I can continue making these videos. All right, guys, let's go ahead and jump into it. All right, let's see what Apple stock is up to today. So they have the stock symbol already up here for us, AAPL. All right, so Apple stock is trading at $205.32. It is down $8 today, and that's down about 3 to 4%. All right, so let's see if we can find some good news articles that talk about the earnings report. All right, we'll start with this CNBC article right here. Apple shares fall as Cook says very difficult to predict tariff costs beyond June. So let's take a look at these key points here. Apple reported second fiscal quarter earnings Thursday that beat Wall Street expectations, but the company's closely watched services division came up light versus estimates. Just want to mention this is second fiscal quarter, but it's quarter one calendar year. So just to not confuse that. The other key point, the company expects tariffs to add $900 million to its costs for the current quarter, assuming no other major changes occur. The CEO, Tim Cook, said that on Thursday. He also added that it is very difficult to predict beyond June because he's not sure what will happen with tariffs. And he also said that Apple is already sourcing about half of the iPhones for the US from India, and most of its other products for the US from Vietnam, where tariffs are lower than they are from China. All right. So some mixed bag there as far as news. So let's take a look at these specific numbers here. All right, so earnings per share came in at $1.65 versus $1.63 estimated. Revenue came in at $95.4 billion versus $94.66 billion. So like the article mentioned, they beat on earnings and on revenue, so on the bottom and top line. iPhone revenue came in at $46.84 billion versus $45.84 billion, so $1 billion more than estimated, so that's very good. Mac revenue, that also beat expectations. iPad revenue beat expectations. Wearables, home, and accessories revenue, that missed slightly on revenues. Services revenue, that also slightly missed. And gross margin was in line, 47.1% versus 47.1% expected. Let's see if there's anything else in this article. All right, so overall, I think it's still very positive results for Apple. They beat on most of the metrics and the major ones that actually mattered. They beat on those, so that's very good. Just the negative news was about, the tariffs, the fact that they're not exactly sure how tariffs will impact, revenues past next quarter. So that's causing a little bit of headwind, and that's why the stock was down 3% today. But overall, more good news than not. Let's see if there's maybe another article or two we can take a look at. All right, so this article mentions the key details from Apple's earnings report as the company faces a major change. So we see Tim Cook here, the CEO. Apple faces a major change. A federal judge slapped Apple around. All right, so then it says, then came the earnings report. It was a mixed bag. Apple beat revenue and EPS, but expects cost of Donald Trump's tariffs to be around $900 million. Sales in China were worse than expected, and the stock was down 3%. All right, so that's good enough as far as that article. Let's see if there's one last one here. All right, let's take a look at this one. Apple shares fall as buyback cuts, tariff fears, fan investor jitters. All right, so something important that this article mentions is shifting supply chain. So Cook said Apple's shift away from manufacturing in China would include sourcing more chips from the US and expanding its footprint in key states like Texas, Arizona, and Oregon. So Apple is shifting its supply chain. So it was mainly in China previously, but as we mentioned earlier, a lot of most of their iPhones are now made in India, and they're also moving to other countries like Vietnam and also creating some things in the US as well. So that's, I think, very, very important and good for the company and stock going forward. And this will be the last article we'll take a look at here. Apple projects $95.4 billion revenue for quarter two 2025 amid record services growth and US investment plans. So Tim Cook highlighted $95.4 billion in revenue for the quarter, a 5% year-over-year increase. He announced a $500 billion investment plan over the next 4 years in the US. All right, so risks and concerns, tariff-related cost increases. We mentioned that $900 million for Q3 2025, slower growth in wearables, home and accessories, and regulatory and legal challenges. So overall, I mean, they had a very good financial performance in this past quarter. I mean, the only negative things is the tariff situation, which should hopefully clear up soon. So I'm very impressed so far. So next, let's go ahead and take a look at the stock chart. All right, so here we have the stock chart. So again, Apple stock is at $205.05, down $8 and change, down about 3%. So we can see it's not having the best day today, but it's not down that much. Let's take a look at 5-day chart. So the stock has been around 207, $8, went up to 212, 213. And then the earnings report came out and caused this dip here around 3%. So, but the stock has recovered since the initial low here. So the stock should continue to recover in the coming days. So this is the 1 month chart. So the stock was in the 220s just about a month ago. And then we had in April, the tariff situation caused the stock to go down significantly. And then it went down, it recovered and then went down again. So on April 21st, it was around $191. If you got in at those levels, it's gone up nicely since then, up to 205 now. So stock is doing pretty well. So let's take a look at 3 month chart. Over 3 months, the stock is down around 13%. It was up here in the 240 range. And then we have April with the tariffs again. So if you got in on April, it's recovered, solidly since then. And then we have the little dip here from the earnings report. So the stock should recover more and get back to its previous levels, the 220s, 230s, 240s in the coming weeks and months. So that'll be exciting to watch. Over 1 year, the stock is up 18%. It was here in the 180s, going up all the way to the mid 200s here. It's gone down again since then, but it should recover back to these mid 200 levels going forward. 3-year chart. The stock is up over 30% over 3 years. We can see here it was in the 120s, 130s, and now it's above $200. So it's gone up significantly over 3 years. Yes, it's had dips periodically and regularly, but all of those were good buying opportunities. And then again, we had this dip in April. So that's looking like also a good buying opportunity that it was. And the stock is recovering from those April lows. So that's good to see. 5 years, similar story. It's up over 180%. Stock was in the 60s, 70s, 80s here. And it's gone up very nicely since then. Very nice looking growth chart with dips every once in a while. So I think that's a good looking growth chart over 5 years. So it's not perfect, but definitely significant growth over 5 years. And then max, the stock is up over 260,000%. You can just see all the growth that the stock has had over all the decades. Every time it's had a dip, the stock has recovered very nicely. So again, we just went through this dip in April, and the stock should recover from these levels here and start going back up into the mid 200s and higher after that. All right, so that's good enough as far as the chart. Next, we'll take a look at some price targets for the stock. All right, let's see if we can find some price targets for Apple stock after the latest earnings report. So again, the stock is at $205 right now. All right, so here on the right, we see some information. So analyst recommendation is a buy, and that's based on 47 analysts, and that's as of today. Out of those 47 analysts, 22 of them have a strong buy rating on the stock, 7 have a buy, 16 have a hold, 1 has a sell, and 1 has a strong sell. Based on those 42 analysts, the average 12-month price target is $234.97. So that's about a $30 higher than what the stock is currently at. So those analysts are bullish on the stock. They think it's going to go up another $30. So they're not the most bullish on the stock, but they're still bullish enough to have a higher price target than what the stock is currently at. All right, let's see if there's some other information to take a look at. All right, so in this article right here, it mentions Dan Ives raises Apple price target to $270, says worst case scenario off the table for iPhone tariffs as Tim Cook reveals made in India move. All right, so we have one analyst who increased his price target on the stock. So 270. So we mentioned the stock is at 205. So that would be another $65 increase in the next 12 months. So we'll see what happens there. So we have another price target here. So Citi maintains Apple stock buy rating, $240 price target. On Friday, Citi analysts maintain a buy rating on Apple stock with a steady price target of $240. So that's a pretty solid price target there as well. Stock again is at 205 and they have a $240 price target. Let's see if there's some other ones here. So it mentions Rosenblatt downgraded Apple from buy to neutral, adjusting the price target to $217. D.A. Davidson raised its price target to $240, maintaining a buy rating. Morgan Stanley maintained an overweight rating with a $235 target. All right, so it's kind of a mixed bag. Some analysts increasing their price targets, some lowering them, but a vast majority of the analysts are still bullish on the stock. They have a price target that's higher than the current price of the stock, so that's good to see. And this will be the last article we take a look at. So this one mentions Apple stock gets price target cuts on tariff headwinds. At least 3 Wall Street analysts have cut their price target on Apple. And this was before the actual earnings report, so they probably have different ones afterwards. So he just mentions that Loop Capital reduced their price target to 215 from 230. Barclays decreased their price target to 173 from 197. So that would be a significant decline in their estimate. So also mentions on here, Raymond James reiterated their outperform rating on Apple stock, but they cut the price target to $230 from $250. All right, so again, a mixed bag. Most analysts are still bullish on the stock. They have a price target higher than the current stock price. A couple of the analysts lower their price target due to the tariff situation. So overall, not bad if you're an investor. All right, guys. So next, we're just going to kind of summarize everything, and I'll give my opinion about Apple stock. All right, guys. So let's summarize what we took a look at today. So Apple stock was down 3% today. They reported their earnings for quarter one of 2025 yesterday. So overall, the results were very good. They beat on most of the metrics and on the major ones, on earnings per share, on revenue, and a few other ones. They had a slight miss on a couple of other ones. And we looked at the news articles that mentioned that. Overall, the news and results were good. Just the tariff situation is still kind of an issue, and hopefully that gets resolved and the company doesn't have that issue going forward. And plus, a lot of their supply chains going forward will be outside of China, so that was very good to hear as well. Number two, we took a look at the stock chart. We saw, just in the recent history and in longer history, just how much the stock has gone up. The stock does have, meaningful declines and dips every once in a while. But looking back at those times and the chart, all of those were good buying opportunities, and the stock has significantly recovered from each dip that it's had. So that was good to see. And number three, we looked at the price targets, kind of a mixed bag, but most analysts are still bullish on the stock. They have a price target that's higher than the current stock price. All right, so just my opinion about Apple, the company, and Apple stock. So obviously, Apple is one of the biggest, if not the biggest, tech company in the world. And my expectation is that they're just going to continue to deliver very good results going forward in the coming months, years, and decades. Just like every company, they have their issues and their headwinds. So the tariff situation, the fact that they still make a lot of their iPhones out of China, that is definitely something to watch. But they're moving a lot of their production outside of China, and the tariff situation is probably going to get cleared up soon. So it's a hurdle, but nothing that they can't overcome. And Apple stock, we saw just how much it's gone up over all the years. My expectation is that the stock will get back to its previous high levels in the mid 200s, so around $250 in the coming weeks and months. And from there, the stock should just continue to go up as long as the company delivers good results, as they should. So I can definitely see the stock trading $250 to $300 per share in the coming years. And I'm, bullish on the stock, understanding the issues and headwinds that the company has. So overall, I'm a fan of Apple stock, and we'll see what things look like in the future. All right, guys, that's going to be it for today. Again, if you find value in this video, consider subscribing to my YouTube channel so that I can continue making these videos. And we'll see you guys next time. Take care.